So that's the kind of action that the government is likely to take, coming through in that report. Meanwhile, I was telling you about India's mid-cap stocks that they are gaining favor with foreign investors. It marks a reversal after 5 years of decline. This is as per Goldman Sachs. Now, overseas investor holdings in mid-caps, like I was telling you, has gone up by 175 basis points this year to 16% of their market capitalization. Compare this to 250 basis point kind of drop that we've seen over the past 5 years. So this renewed interest that we are talking about in the smaller and the riskier Indian stocks, it reflects a certain amount of confidence on Dalal Street despite these concerns over valuations. And we're looking at that impact play out on the midcap index as well, which has gained in recent times. Let's break this down with Aditya Shah, founder at Hercules Advisors, who's joining us on the show. Aditya, always good to get in your perspective. Typically, investors look at stocks that are going to give them high returns over a short period of time. And this is typically what the story would have been in midcap stocks. But certainly in recent times, the kind of decline that we've seen in the mid-cap universe over a span of 5 years, that trend is reversing, especially with foreign investors. They have this added interest despite the kind of premium valuations in that universe. Why do you think this is happening?
It's very simple. India is now a growth market. We are coming out of a phase from 2018 to 2022 when the economy was not really growing. Now, with the help of government's impetus on infrastructure, on manufacturing, the economy is picking up. Today, we have seen Apple's contract manufacturer Foxconn has started its manufacturing of iPhones in India, and this is just the start. A lot of companies across sectors like chemicals, like pharma, like manufacturing per se, like auto manufacturing, all of them are coming to India, and slowly and steadily growth will come to India. And that's what the investors are really betting on. Over the next 10 years, India ka time aa gaya hai, jaise people keep saying. So really India ka time aa gaya hai, and India has come to the fore. With China's growth lacking, investors are even more betting on India. The growth story of India is here to stay at least for the next 10 to 15 years.
But Aditya, what you're saying is in general something that you've held on as a view for a long period of time about the Indian markets in general. But why are they preferring mid-cap stocks over certain A-line counters?
See, what really happens is if, let's take the example of IT. If a mid-cap IT company will grow at about 10 to 15, if a large-cap IT will grow at about 10 to 15%, a mid-cap IT will do a 15 to 25%. So when investors chase mid and small cap, they're basically trying to chase faster growth in all of these companies. And as you already know, 75% of India's population is about 28 years of age. And consumption within the economy as the consumption within the economy continues to keep growing, you will find all of these companies continue to keep benefiting. And that's what the story is all about. Try and bet on small and mid caps and try to capture the growth story. At the same time, valuations are aggressive now at this stage. Therefore, you need to be very careful. Try to bet on very high quality companies where the business is very, very strong. And still from here on as well, you will find 5 years down the line, you will say that this was the bottom. And from here on also, all of these companies have made a lot of money.
Tell us about the RBI's moves in recent times. To be able to tackle inflation, there have been rising interest rates. But of course, that cycle could turn soon. How is that going to impact the course of the mid-cap universe?
See, first of all, we need to applaud the RBI. It has been the best central bank across the world in handling the inflation crisis. Now the inflation crisis is at its end, and we will see central banks across the world slash interest rates somewhere in the next year. As the interest rates continue to keep moving down, maybe the RBI will also start cutting rates somewhere in June. Near term, we have headwinds in terms of vegetable prices moving up. But I think over the next 3 to 4 months, that will also ease off. So the RBI will start to cut interest rates somewhere in the later half of next year. And that should also help the equity markets per se. But net inflation in India is controlled. Interest rates have topped out. And from here on, the RBI will stay here before it decreases interest rates. And when it decreases interest rate, it is positive for equities.
But Aditya, even decoding this current trend, we are not seeing as much domestic participation as much as there is foreign participation or investments in the mid-caps. Why do you think that's the case? And are they going to concentrate that much on consumption and cyclical counters?
I will disagree with this fact. Let me give you a data point. A data point is the small cap SIP is at about 3,000 crores. It has been 3,000 crores per month, and it has been at its highest over the last 12 to 24 months. So people are domestically are also trying to flock into the small and the mid caps. However, mutual funds are trying to restrict the flows because they think that valuations have gone through the roof and it is very difficult to invest money. For example, the Nippon Small Cap Fund has restricted its inflows. The Tata Small Cap Fund has also restricted its inflows. So, in my opinion, everybody is trying to block small and mid caps. And I will try to quote Shankar and Naren here. We are in the boom phase, and in the boom phase, the valuations can go to a euphoric level. So, everybody needs to be very careful while investing in these small and mid caps. Be mindful of the valuation and don't think that even though India is a growth story, the markets cannot correct. Within the bull market, we can have violent corrections of about 30 to 40%, which you need to be really mindful of.
While the mid-caps look promising right now, we have to be mindful of corrections. That's the important takeaway from what Aditya is saying. Thank you very much for joining us with your perspective. As always, thanks very much.